Alright everyone, Cowboy Trades here. Welcome back to the channel for an update on the stock market. I just wanted to get a really quick video out before I do go to kendo training, so I am going to fly through this and look at some different charts, look at fear and greed, liquidity tools, book depth, all that good stuff that we normally look at. So we talked about this the other day in our most recent video, SP500 reality check, and we talked about how, obviously this time is not different. We're going to approach this trend line and we're once again going to get rejected. And as you can see on the daily time frame, we've absolutely started nuking. The S&P 500 is down approximately 1.3% today, and it is really not looking good for the markets. Once again, we approach this trend line, and just like we highlighted, when you look at the EMA ribbons, when you look at the bull market support bands, you top out above the bull market support bands, you break down, you make new lows. You have your next top above the bull market support bands, break down into new lows. Top above the bull market support bands, break down into new lows. And it looks like we've, topped above the bull market support bands, broke down, didn't quite make new lows, but we've had a double top above these bull market support bands. And, within the past month, since the 1st of December, really, we've had 1 rejection, 2 rejections, and 3 rejections from this trend line. And as we're starting to turn down, it looks like liquidity conditions as well will also start to turn down. We look at this tool quite often, and in the most recent video I said we're very, very close, in my opinion, to adding another one of these blue vertical lines on our chart. Now, if you're new to the channel, warm welcome. These blue vertical lines don't actually correlate to the top. If you notice, you can see, for example, over here, the blue line appeared, the day before this top, and as you can see here, this blue line appeared to be in a random place a few days before the top. This is because it's not correlated to the top. It's correlated to the top in the mid price in terms of liquidity conditions. You can see there was a top here, top here, top here, and top here. And this is what these blue lines correlate to. In terms of liquidity flows into the market and the book depth becomes overextended, this highlights a liquidity top and subsequently getting ready for that next break back down to the downside. Now, like we highlighted, if we go over to the lower time frames, let's look at the past quarter to date. So October, November, December, January. Let's look at the last quarter to date. As you can see, liquidity conditions have really, really run up since we've been having this little rally. And at this point in time, I do start to think that we are going to be converging back down to the downside. If we look at the past, what's been going on for the past year, we had an absolute run up in terms of liquidity. So I do believe this is once again going to be another liquidity top before we do start heading back down to the downside. Now, before we look at the 2008 fractal, let's give you some of my price targets really quickly. Like I said, I'm going to zoom through these. Now, on the daily, we highlighted this massive bearish pennant, rising, broke to the downside. Once we broke to the downside, we broke down, flipped this trend line as resistance, and broke down into a new bear flag. Now, in the past couple of days or so, you can see if we're connecting candle body close over on the 4-hour time frame, you can see how I've drawn it a little bit better. But we poked our head above this and had basically a failed move equals a fast move in the opposite direction. We tried to break out above this, we came back to back test it, tried to push up, and absolutely fell through the floorboards. We also had some bad economic data come out today, not anything too important. We also had news that Jerome Powell caught the foo-foo. So, all in all, the markets are a little bit shook right now as we're breaking back down to the downside. So this was a failed move outside of the bear flag. So at least in the short term, and also we filled this liquidity gap, or sorry, we filled this price gap rather. So, we're obviously going to start breaking back down to the downside. In the immediate short term, we have a 236 Fibonacci, which beautifully lines up with the bottom of this bear flag, 3,845. So from where we're currently residing at this moment in time, I do foresee about another 2.6% drop continuation, probably going to play out for the rest of the week. So 2.6% into the end of the week, I do think we're going to break down. And if we come over to the 4-hour time frame, so I can highlight a couple of gaps that I have my eyes on. So the price targets are a little bit hard to see over on the daily time frame, so let's come over to the 4-hour. This price gap has actually been filled. So the price gap that I've currently got my eyes on is this one all the way down here that was formed from the 14th of October. We opened higher on the 17th and we never came back and back tested this. So we've got a nasty price gap to start filling. The start of the price gap is around 3,640, and the bottom of the price gap, of course, we need to head down to the bottom to fully fill this. We'll be down here at 3,605, meaning from where we are at this moment in time to fill this price gap, we'd need a 8.65% drop on the weekly time frame. If we zoom out, you can imagine if we're coming down to this range, we're probably going to come down and make new lows very, very soon. So let's get out of here. Let's also talk about the 2008 fractal. We talked about this in the most recent video, how, yes, you know, sometimes, I believe we counted them, sometimes you can count, you know, 1, 2, 3 week divergences where it says there's the top, but the top is, you know, 1, 2, 3 weeks later. And, you know, the SP 500 said that we were going to have a bounce here, which was nicely predicted, but then it said we were breaking down on this week. And so far, we've been diverging for 1, 2, 3 weeks, and now on the 4th week it looks like we're starting to snap back down to the downside. So this might have been once again another 3-week divergence before we do continue following the macro trajectory of this 2008 fractal. That is pretty much all I wanted to talk about for this video. Like I said, I'm going to be heading out very, very soon, so I just wanted to get a quick update. And we also talked about how this SP 500 2000 fractal was very interesting, because a lot of the times you can see they're somewhat inversely correlated. You can see the top over in the tech stock bubble correlated to the bottom over here. And as we're topping out right now, you can see this is where the 2000 tech stock bubble bounced. So it's just an interesting thing to point out. I personally have my eyes firmly fixed on the 2008 fractal rather than the 2000 fractal. Like we also talked about yesterday in our stock market update, the S&P 500 being the SPY actually came up and pretty much touched this trend line. Now, while I remember we looked at the book depth, we didn't look at the cost of trade. Cost of trade is absolutely elevated right now. So, you know, if you are bullish, you're going to be, and you are longing the S&P 500, you're now going to be paying the funding fees for bears. So it just kind of sweetens the deal to be bearish at this moment in time. Heading over to the oscillators. On the daily, we're pushing into bullish territory in a bear market, which is indicative we should roll over. The MFI approached 80 and is starting to head down. That is bearish. Stochastic RSI on the weekly literally just came up to 100 and crossed bearish. Obviously, of course, that is still bearish. Weekly time frame as well, you know, we're having a big move into bullish territory in a bear market, and every single time this happens, just like here, you rolled back down to the downside. And previously, you know, when we started rolling back down into dark green, this was where the top in the S&P 500 formed. You can also see the MFI is still in a downtrend, even though it's not linear. You can see we topped out at 81. We pretty much had a double top round about this range, and we're kind of making lower highs from this 68 region. We're currently sitting at 62 after surpassing the heart line. So liquidity conditions, as if we didn't already know, we just looked at the book depth to visualize liquidity over here. This is a much better way to visualize liquidity, but MFI as well tells us that liquidity conditions are overextended. Stochastic RSI, blue moving average, hasn't even crossed bearish on the weekly. It is just approaching 80. So all in all, things are not looking good. We looked at the fear and greed yesterday, and this was ranging between 65 to 68, almost ticking into extreme greed. As the markets are starting to come down, so has the fear and greed, but we are still sitting in greed at this moment in time. And of course, as I am a cryptocurrency channel, I will let you know if we are looking at Bitcoin very quickly on the 4-hour time frame. It looks like we've got a nasty BART pattern, which is going to carry us all the way down to approximately 17,300. Like I said, just a quick update before I head out. All I've got for you for this one, as always, it's been your boy Cowboy Trades. I'm out. Peace.